Welcome back to the Wall Street Podcast. Today, we're diving into a significant Citi Research report. It's titled Price Hikes in Four Markets, Street Prices in Additional Countries. And it came out August 15th, 2025. We'll be looking closely at Spotify's recent premium price changes, the market's response, and what this all means for growth and share value.
Exactly. The report really digs into Spotify's strategy using these price hikes to boost revenue. It looks at the immediate effects of what's been announced, but also, crucially, the potential impact of, well, future hikes, particularly in the U.S.
Right, so let's lay out the timeline. First, on August 4th, Spotify signaled price hikes were coming, but didn't specify where exactly, just across regions like South Asia, Middle East, Africa, Europe.
Latin America, Asia Pacific, too. It was quite broad initially.
Then the specifics came on August 14th.
That's right. They officially raised premium prices then, roughly 18% on average in Austria, Germany, Liechtenstein, and Australia.
And these varied a bit.
Yeah, between 14% and 24%, depending on the specific plan someone's on.
Okay, and the market reaction? Quite telling, wasn't it? Shares jumped 5% after that August 14th news.
They did, but Citi's analysis suggests only about 1% to 2% of that jump was, directly tied to those four markets.
So the other 3% to 4%.
That seems to be the market pricing and expectations, anticipation of more price hikes, particularly in, well, bigger markets.
Which brings us squarely to the U.S. market.
Indeed. Investors are really focused on a potential U.S. price increase, maybe Q4 2025, possibly into 2026.
And the estimated value add there is significant.
Hugely. Citi puts it at roughly $82 to $137 per share added value. The range depends on how much of that increase Spotify has to share with record labels.
Okay, that leads to our first key question then. Why such a strong reaction, that 5% share bump, when the hikes announced were in markets that only account for, 4% of premium revenue?
Well, like we touched on, the bulk of that reaction, the 3–4%, wasn't really about Austria or Germany per se. It was the signal it sent. The market read it as a sign that Spotify is willing and able to raise prices and started anticipating similar or even larger hikes elsewhere.
So it's pricing in future potential, specifically that U.S. hike potential.
Precisely. It's a forward-looking reaction, betting on Spotify's ability to execute a broader monetization strategy.
Makes sense. So let's quantify that future potential a bit more. What's the estimated financial impact if they did roll out, say, an 18% hike across all non-U.S. markets, and then layer on the U.S.?
Okay, so an 18% hike across all non-U.S. markets, assuming Spotify keeps all the uplift, Citi pegs that value at around $191 per share.
But they likely share some with labels.
Right. If labels get, say, 40%, that value drops to about $115 per share. Still significant, but lower. Now, the U.S. hike, as we said, is estimated between $82 and $137 per share on its own. That range, again, reflects different assumptions about cost sharing with the labels. The U.S. market is just that important.
Understood. So beyond these price moves, what's Citi's overall take? Their investment perspective, key risks, opportunities.
Citi's holding a neutral rating on Spotify with a target price of $715. The main risks they highlight are, well, increasing competition in streaming audio. It's a crowded space. And also, any difficulty Spotify might have in keeping its premium churn rate low.
Right. Churn meaning subscriber cancellations. Keeping users is key.
Absolutely. On the flip side, the opportunities, the potential upside, comes from reducing that churn even further and improving their overall margin profile, getting more profitable per user.
So it's not just about price hikes, it's also about retention and efficiency.
Exactly. Those are crucial for the long-term story.
Now, bringing this back to you, the listener, these price increases, starting small but with hints of more to come, directly impact your wallet. It likely means higher monthly bills for streaming services like Spotify down the line, affecting your entertainment budget.
It certainly makes you think, considering how strongly the market reacted just to the anticipation of higher prices. What does that signal about the streaming industry overall? Are we seeing a broader shift towards squeezing more revenue out? And what does that mean for you as a consumer, for choice, and how we even value digital content anymore? Something to ponder.